Look, if you're thinking about getting into the stock market, chances are you have one simple goal in mind: to make money. But how you go about that, well, that's a whole other story. There are really two main paths you can take, and today we're going to break them down: trading versus investing.
All right, so you've decided you want to put your money to work for you. That's great. That's actually the easy part. The really hard part is figuring out the how. Are you in this for a quick score, or are you trying to play the long game? Because your answer to that one question is going to change absolutely everything. The best way to think about it is like a race. On one side, you've got the sprinters. They're all about explosive speed, quick bursts of energy, and getting to the finish line fast. That's trading. And on the other side, you've got the marathon runners. They're focused on endurance, on patience, on strategy over a really long distance. That's investing. The goal is the same, to grow your money, but they are two completely different ways to run the race.
Okay, let's dive into that first path. Let's talk about the trader's sprint. This is the fast-paced, high-stakes world where big decisions get made in minutes, hours, or maybe a few days, but definitely not years.
So at its heart, trading is pretty much exactly what it sounds like. It's all about buying and selling stocks. A lot. The entire game is to buy low, sell high, and pocket that difference. And the key words here, the ones you really need to remember, are frequently and short period.
So how in the world do traders figure out when to buy and sell so quickly? Well, their main tool is something called technical analysis. Now, these folks aren't digging through a company's boring financial reports. Nope. They are glued to charts, looking at price patterns and historical data, because they believe that the past movements of a stock can help them predict where it's going to go next. It's all about the stock's price, not the actual company behind it.
So let's play out the dream scenario, right? You're looking at a chart, you think a stock is about to pop, so you buy one share at $10. And guess what? You were right. The stock jumps up to $13. You sell it immediately, and bam, you just made a $3 profit. Sounds pretty easy, doesn't it?
Yeah, but if it were that easy, we'd all be millionaires, wouldn't we? That dream scenario is just that, a dream. The reality is, well, it's a lot messier and comes with some pretty serious risks.
And this is where we have to get real. Making these predictions is incredibly hard, and a lot of the time, traders are just wrong. You might buy at $10 and the stock tanks to $8. To protect themselves from losing everything, traders will use something called a stop loss, which automatically sells the stock to cap their losses. But here's the crazy part. Even when you win, you can still kind of lose. You might sell at 13 for that quick profit, only to watch in agony as the stock keeps climbing to $17, $20 without you. Okay, let's totally switch gears now. We're leaving that frantic sprint behind and we're settling in for the long haul. Let's talk about the investor's marathon. Investing is a whole different mindset. It's about buying and holding on. An investor doesn't really care about the little ups and downs of the market each day. They're buying a small piece of a company because they believe that business is going to grow and become way more valuable over many, many years, maybe even decades. And instead of just staring at charts all day, the investor's main tool is what's called fundamental analysis. This means they're acting more like a business owner. They're digging into the company's health. How much money does it make? Is it profitable? Who's running the show? They want to know if the business itself is a solid, well-built machine that's designed for long-term success. Let me paint you a little picture. Let's say you research a cool new shoe company and you really believe in what they're doing. You buy 10 shares for $500. Over the next 5 years, that company does great. You even earn $100 in dividends, which is basically your slice of their profits. Then, by year 5, the stock price has tripled. Your initial $500 investment is now worth $1,500. See? That's the magic of patient growth. But this right here highlights the single biggest challenge of being an investor. As the legend Warren Buffett himself said, nobody wants to get rich slowly. This marathon strategy requires a ton of patience. And let's be honest, that's really hard in a world that wants everything right now. So what kind of reward can you get for all that patience? What does that long-term power actually look like? Well, let's take a look at a real-world example that's just, honestly, it's pretty mind-blowing. Check this out. If you had put just $300 into Apple way back in 2008 and just left it alone, through all the market craziness, all the ups and downs, by 2024, that little $300 investment would have ballooned to over $22,000. I mean, wow. That right there is the incredible power of the marathon. All right, so we've seen the sprint and we've seen the marathon. Now it's time to put them head to head. Let's get to the final showdown. This chart just lays it all out so perfectly, doesn't it? I mean, look at the differences. For time frame, you've got short-term versus long-term. For analysis, it's charts versus the actual company's health. For mindset, you're either chasing the price or you're betting on the company's growth. And maybe the biggest one of all, the risk level. Trading is high octane and super stressful, while investing is usually a much more relaxed, lower risk game. So, after seeing it all laid out like that, the million-dollar question is still there. Which one of these paths is the right one for you? Well, it really just comes down to who you are and what you want. Trading might be your thing if you're chasing quick profits, you have a stomach made of steel for handling risk, and you can dedicate a serious amount of time to watching the markets. It's practically a full-time job. Investing, on the other hand, is probably a much better fit if you want stable, long-term growth, you'd rather not have the constant stress, and, you have a life to live. But look, no matter what you're thinking, here is the single most important rule, the one thing you absolutely have to remember. Whether you become a trader or an investor, you have to educate yourself first. Because without knowledge, without a clear strategy, you're not really doing either of those things. You're just gambling. In the end, it's your choice. It's your financial race to run. It all comes down to understanding your own goals, how much risk you can handle, and how you want to do it. So the only question left is, are you a sprinter or are you a marathoner?